Welcome to TradeNBI.com. This is Jonas, reports for the 15th. Well, as we talked about, the bulls had to show up. We got down to the ABM yellow, popped up that, and I said above that 76%. Definitely was a long setup, and you can see as long as magenta stays above this level, and now you have, well, MBI white down to 1.5. That's a continuation. Anytime white is below that 10 level, you can see that it creates beautiful long setups within that. And then it's just a matter of that point looking for either crosses of the white above the red or the move back and forth of red across the gray. And you can see the blue crossing below. Those signal little points of fade off. It's just a question of then do you get a follow through. Usually we look for that descending gray, and then you get the crossover where white moves above that 10 before you're going to see any kind of pullback retreat. So all in all, like I said, market's still in that bullish phase. uh, NASDAQ looking identical from that standpoint from an MBI sector. um, no change. And kind of what's expected. Of course, you've got the inflation numbers that have come out. The expectation everybody has still is that somehow the Fed is going to ease within this as rates continue to decline. Um, and what do they do if it's not and comes out higher? I'm sure they're going to do everything they can to massage it as best possible, but it's going to be pretty tough when you see what we went through with that oil rise. Now the decline, this is going to affect the second half. So, you know, in the summer and that you're going to get a much softer reading, which will be supportive of it. The real question is this fade off in oil uh, more directly related to softening of economic demand? And that becomes the real question overall. And of course, this is super bullish for the euro from its standpoint, because cheaper oil means that you don't have to trade those euros out as much, and eurozone is actually holding on to positive growth levels. So that's just an encouragement, made that easy for them to maintain it. But as you can see, gold continuing its climb, and it's not going to stop. Just no way around it. Commodities all have to increase because, it's inevitable, because at the end of the day, where are you going to defend the devaluation of the currencies? And by that, we just mean it's just relatively less buying power for the same dollar. Doesn't Everyone always talks about the end of the dollar. That isn't so much that; it's just you get less for it, and that's the debasement that takes place. It's not a collapse thing because it's happening across all sectors. It just happens at different rates for different currencies, and you could just go back and remember what you could buy 5 years ago for the same price tag, and that tells you how much your dollar is lost. Pretty straightforward stuff. Bitcoin and that still muted overall, and some of this has to do with the halving that took place, and of course ETH has its regulatory issues that haven't been resolved yet, and so keeping those muted also helps, because where are you going to put your money? You got to go to the market. That becomes the reality of it. So when we looked at it from our 50K standpoint, we had the MBI white that started to climb here after that spike that took place, and we got one intraday bar that really cleared out any of the stops. Really weren't any positive extremes to fill in at this particular level. There were just a few that were down here on the extreme that were just pop-ups, and that filled those in. They were close, they weren't quite positive, and the ones that were positive were already elevated levels, so it didn't matter. What you'll be looking for here will be any return of white MBI above red in that particular case, and or a dip. Well, you need it to coincide with a dip below 33 with the magenta. As long as it maintains those elevated levels, you're going to continue to see the rise. And so it was fairly clean from that standpoint. When we went up above here, there was a bit of a fade that took place, but as soon as the red crossed back above white, in that case, that led to the turnaround move, and sure enough, you can see the blue crossing the gray, which we talked about. It happened at the same time of magenta over, which is kind of that primary leader, and it was a beautiful short cover setup. Worked out just fine. Intraday, um, wasn't all that interesting. You ended up with this soft period at the started in pre-market before things took place, and then we rose from there. Just kind of traded back and forth, filled in, and then by later in the day, it was just buy, 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 buy. And this again takes care of the options situation taking place in between. You can see here in pre-market, relatively flat, just about up and down, going back and forth. And that will set up for the day. Everyone's going to be waiting for those numbers to come through to see what the impact is, and if they believe the Fed is going to be able to do something as far as easing, that will be a huge boon to the market. A miss could be negative. It just depends on the perceptions, and again, we're going to see that in the readings long before it takes place. So it's just a matter of following what our signals are. Pretty straightforward from that standpoint, but a lot riding on it, absolutely. There's more advantage to an upside move, though, if the number is less severe than people are expecting. So again, you got to play against the expectation situation. And at this particular point, the expectation, I think, for most people has to be that the number's going to come in hotter than most people want it to be. But we'll see how they handle it. If you want to call it those terms, we'll just be kind that way. As always, though, anything relevant, I'll put on the Skype chat. Have a good one. Trade well.